Okay, well, thank you for joining. Today, we're going to take 45 minutes of your time, maybe a couple of additional minutes later on for question and answer. I think you would have, there is a question chat box where you can actually write your questions, and then we will take them at the end and we'll try to select some of them. If there's not too many, we're going to answer all of them. If not, then we're going to ask you to write to us personally if there are too many of them. But today we're going to be speaking about marketing and doing life insurance business in and from Switzerland. This is an interesting topic which has been actually making me and the firm busy for the last 17 years. Mm-hmm. And since 2004, when the law on the supervision of insurance business came into force in Switzerland, which was at that time the new law, and a number of questions came about that topic. And why is it interesting? It's because the regulator in Switzerland has evolved a lot and has changed a lot also their view, their practice, and everything has evolved. And what was done in the past is probably no longer applicable today. And we will see at the end, and Lucile will speak to you about it. It will continue changing because the law now, there's a new draft law that will actually replace the law of 2004 that will come into place. Mm-hmm. And in addition, there's also the new law on financial services that came into place, and all of that needs to take into account. But before that, I would like to actually go back to basic, and we're gonna go back at what is the definition of life insurance and what is the definition of insurance business in Switzerland and from Switzerland, and I will guide you from what was done in the past until today and what we believe will be the treatment of all of that in the future. So why is that question interesting? It's basically interesting, and I'm going to start navigating in the slide. Here. Is it not working? Okay, so up here. Sorry about that. Why is it an interesting topic? It's because Switzerland is usually a meeting point. It has been a distribution market over years for financial product in foreign investment funds coming in marketing in Switzerland, because a lot of these rich clients, they have account in Switzerland, or they use Swiss banks, they use Swiss asset managers or Swiss providers. And Switzerland has always been a country with limited services, but with prominent services for the rich of the world. And this is why it's important, because all the foreign industry, financial industry, life insurance industry, have to come in Switzerland to actually meet clients in Switzerland. And those are not necessarily Swiss clients, they are foreigners who have all sorts of issues to solve, and who are not living in jurisdictions which have necessarily a friendly succession tax regime or a friendly capital gain tax regime. And that's why these life insurance products come into place, because they are a very good product for a number of jurisdictions, including in the European Union, for residents in those countries to try to make their life a bit easier and to try to optimize certain situation that they have. So to speak about what has been done in the past and what will be done in the futures, we have to go back to the definition of what is insurance business in Switzerland. And basically, it comes from the law of 2004. And I want to go back to basics because it will help you to understand where FINMA is coming from and where FINMA is going. So are subject to FINMA supervision and hence needs to have a FINMA license any insurance with registered office abroad for the insurance business in Switzerland or from Switzerland, subject to contrary provision of international treaties. And I just want to stop here for a minute because there is no treaties for life insurance business in Switzerland. There was a draft treaty that was never signed by the parties, the EU and Switzerland. There's an international treaties for direct insurance, but not for life insurance, which would then, if that treaty would exist, that seminar, that webinar would not exist, because of course there would be recognition, and then of course you as a foreign life insurance undertaking will be able to come to Switzerland to play around and meet people and even target Swiss residents, because you would be recognized based on that treaty, and it's not the case. So what is an insurance business in Switzerland, and what is an insurance business from Switzerland? And that's the next slide. So a life insurance business in Switzerland is a very restricted scope. And you are doing a life insurance business in Switzerland as soon as you target a natural or legal person domiciled in Switzerland as a policyholder or as an insured person. And when you read is one. Basically, as soon as you target one, then you're in scope. So you have to think about what is happening. And that's for the life insurance definition. Then, of course, for direct insurance as well, which somehow will apply also to life insurance. As soon as there is one risk insured in Switzerland, then you're in scope as well. And of course, it's irrelevant whether the policy is signed or not in Switzerland. It's irrelevant whether you use a Swiss bank or not. I will come back to that and explain to you what can be done and what cannot be done. But what you need to know now is that as soon as you actually come in Switzerland, you target one Swiss resident, you're in scope. So as soon as you come in Switzerland, you target a non-Swiss resident, are you in scope or not? We'll also discuss about that. But what I wanted to actually go back to that definition is to show you that there is a very different regime applicable between the life insurance regulatory framework and the other financial regulatory framework, which allows a lot of safe harbors and exemption. And here we are. We have, here I selected 5 examples of non-insurance businesses, so financial businesses. Foreigners coming to Switzerland to target and market in Switzerland. So 5 of them, the last one being the most relevant one, but basically fund managers coming to market in Switzerland, their investment fund. To the extent those investment funds are limited to qualified investors, which means professional investors, institutional investors, the fund that does not need to be registered in Switzerland. There are certain rules applicable. It's a very much lighter regime, but it doesn't need to be registered in Switzerland. The financial intermediaries have another type of exemption, which is the number of clients. Financial intermediaries are basically the people dealing with money transfer and money remittance. If they don't target more, or if they don't have more than 20 clients, then they're out of scope, or they're possibly out of scope. If their revenues are below a certain threshold of 50,000 K per year, they're out of scope. Securities are the same thing. Securities house is when you onboard client and you act on a nominee basis as an agent for clients. So basically you take in your account money of clients to invest into securities. If you do not target more than 20 clients, then you're out of scope. And there is also not only a number of clients, a safe harbor for the number of clients, but also for the type of clients. Same thing then for investment funds. So certain clients, many institutional clients, if you would onboard hundreds of institutional clients, then you're out of scope. You don't have to, and you don't have to actually register with FINMA. The manager of collective investment schemes, they have actually a de minimis. If they manage less than 100 million, then they have a much lighter regime. But what is interesting is foreign bank coming in marketing in Switzerland, because basically that would be a comparable regime, right? So a foreign bank coming to market in Switzerland, you take a French bank coming to market in Switzerland, if that French bank does not have a rep office in Switzerland, does not have a branch in Switzerland, then they can target Swiss residents, and they don't, if they comply with certain code of conduct, whatever, they don't have to register with FINMA, or there is no requirement for that bank to actually set up a branch in Switzerland and be licensed as a foreign bank in Switzerland. And this is not the case for insurance company. So insurance company, as soon as you target one Swiss policy holder, that's enough to trigger a requirement. So you're foreign Luxembourg-based, or you're a Liechtenstein-based, or you're wherever you are, Irish-based, and you come in Switzerland, you have one Swiss resident. Technically, the law says that you have to actually register a branch, and you have to actually beforehand seek a foreign insurance license with FINMA. There's no investor profile exemption, the tab of qualified investors. There's no minimum business threshold, of course, where you would basically, your business is too small to be at risk, there is no de minimis threshold as an exemption. And I will explain to you our discussion with FINMA and how FINMA react to that. And of course, we will see that it is what it is now. It will evolve a bit in the future, but Lucile will drive you through that. So for that, we need to go back at what was done in the past and how we were able, because it's a very strict regime, what was done before to try to go around that regime, right? And then that drives us to the definition of what is an insurance wrapper. In the law of 2004, the Insurance Supervision Act, the ordinance came into force, and that ordinance was actually categorizing life insurance lines. And you had different insurance lines, and you have the A6, which is what they call in French the opération de capitalisation, the insurance wrappers, which was there as an insurance line and so as a possible insurance business. But there was no clear definition as to what was an insurance line at that time. So what we would do to be able to allow foreign life insurance to come in Switzerland was to actually play with that non-definition. And then come to, at that time, before FINMA merged, now FINMA is a global regulator, but before FINMA existed and became a global regulator, there was a lot of different regulators like in the US, right? So we had the Federal Office of Private Insurance, we had the Federal Banking Commission, there was the anti-money laundering authorities and some other authorities, they all merged together. So we were going to the Federal Office of Private Insurance, says, look, there is this foreign life insurance, they want to actually come and target Swiss resident with that product. But we believe that that product does not match the insurance business definition in Switzerland. And we believe it doesn't match because it basically has no biometrical risk, and it could be a capitalization bond, or it could be a financial product, but it's surely not an insurance product. And at that time, over time, from 2005, 6, 7, 8, then FINMA merged, there was some practice, unwritten practice, and FINMA was defining the capitalization operation with something that had still a minimum biometrical risk and which needed some actuarial activities for that. So it was easy. You would go to FOPI, the Federal Office of Private Insurance, and you'd get, oh, this is not insurance product. And they would say, oh yeah, that's not insurance product, so you don't fall under the law. Then you go to the Federal Banking Commission and you say, hey, it's issued by an insurance, so it cannot be a financial product. And if it would be a financial product, it's a kind of hybrid product. There's no branch, there's no rep office in Switzerland, so freedom of cross-border, you can come and market that. And they would say, okay, yeah, that's fine. And then you would go to the tax authority and say, hey, that's still an insurance product according to foreign law, so there should be no stamp duty. And so you had 3 different rulings saying different things, but you would play with them. And then the work of the good lawyers will actually to navigate between the regime to try to get that marketing activity be able to be done with a ruling that was actually granted by regulators. But then, so of course, FINMA merged, and it took time for FINMA to start aligning certain things, and it's still not done. You see in the former slides, actually the safe harbors are not aligned. I mean, it still takes a bit of time. But FINMA issued in 2015 a life insurance circular whereby they started defining actually with more precision what was the different lines. And there's a lot of definitions which are quite complex. And then you have A6, which is the opération de capitalisation. And then he says, oh, for that one, everything that doesn't have a minimum biometrical risk falls in that thing. And then, but it needs to have some mathematical procedures it needs to be managed according to mathematical procedures. then that circular was published, and you had to live with it. And so the without minimum biometrical risk, that's clear. The mathematical procedures, it's just what could it be? And frankly, I always understood it as being some actuarial work on it, and proceedings. And it cannot just be like a managed bank account where you just inject a principal amount, and then basically you have a performance on that portfolio, which is the positive performance or the negative performance minus the fees of the insurance, and that's the proceeds of the insurance upon maturity, so upon the events of death or the events of life. That could not be the mathematical procedures, because it's just plus and minus in every contract. It's the same, right? I mean, banking contract. So anyway, we just live like that. So it closed the loop a little bit, and so where are we then when we have that, right? So what was done? So as I said, what are we doing with the good old rulings that everybody had? Some were claiming they had rulings, some were claiming that they had legal opinions from some law firms, but you can see that originally we're playing with the different regulators, and so what did we do then? So playing with regulators, FINMA merged, and when FINMA merged, what we tried to do is try to get something that was working at the beginning and did not work because FINMA decided not to go for it afterwards, after granting it. And I will speak about that. That might be the solution. Is the lighter regime, and that's basically we succeeded getting from FINMA a license of a foreign life insurance, a Luxembourg life insurance in Switzerland, but with a much lighter regime, because we said, okay, well, we want to target Swiss residents, so we're in scope, but basically the contract needs to be subject to foreign law. There is no biometrical risk. There is basically nothing is booked in Switzerland. In reality, there's no tied assets to have in Switzerland. The Switzerland is just a marketing hub. And because the definition in the law of 2004 included from Switzerland, then FINMA opened its mind and said, okay, well, let's grant a license based on that. And they actually give a lot of waiver. And then later on, they came to the conclusion that there was nothing to supervise. So they asked actually to drop that license. But it might be the solution for the future. And I will actually expand on that a bit at the end. Then what we succeeded doing is also getting foreign life insurance opening a branch in Switzerland, but without a license, and telling FINMA, look, those guys are not going to target Swiss residents. They're just going to target foreign people. The purpose of the branch would be limited to actually marketing abroad, because we're not targeting Swiss residents and there's no risk in Switzerland. It's not life insurance in Switzerland, so no need of a license from you. The home regulators undertake to actually globalize its supervision on that branch, so you don't need to actually look into it. And FINMA said, okay, that's fine. No need to be regulated. You can go for it. And basically that was useful because there was a hub for meeting clients and for doing the proper KYC, for having a nice office to sign a contract where the client would not have to actually go back in Luxembourg or back in France or back in Liechtenstein, and having people there to actually be closer to the client referral, which are the asset managers, the banks, and everything. But then FINMA stopped that a little bit, because FINMA was afraid that because there is a branch registered, clients might give the feeling to clients that there will be it's supervised by FINMA. So they initially said, okay, you can do that, but just put a huge disclaimer that we're not looking into it. And so we've done that, and then later on they said, no, actually that branch doesn't work anymore. We're happy, just do a rep office. And actually the rep office was not done because it's a very difficult animal to deal with, because of course you're not registered with the Register of Commerce. It's very difficult to get a lease agreement. It's very difficult to have this thing. So that would not be the route used. And and basically then we FINMA told us, but we would like to align our practice to the European Union. So what was done is that we are going with lately with one of these rulings saying, but it's not a life insurance product per se, and then trying to play with the mathematical procedures. And when you see that the mathematical procedures for FINMA is something which is not super clear in their mind. Actually, I think they keep it an open box to be able to apply whether they like it or they don't like it, they dislike it. But the reality is, I think the willingness of FINMA is to close the loop of not being of either or, just like you're either insurance product or you're a financial product, but you cannot be in between nothing. And that's basically where we're going. So FINMA indicated that maybe it's not an insurance according to the definition, according to Swiss. So maybe we can argue on that. Maybe you can come, but the reality is that it will be very difficult to convince us, and we want to just, even though there's no international treaty, because it's issued by a foreign life insurance, then we're gonna actually it's almost enough for us to believe that it's an insurance product, and we have to treat it like that. So so we said, okay, well, then that makes sense. It's the end of the smart loophole. So what can we do? And then we said to FINMA, but look, there is a lot of other laws that you're dealing with. The banking laws, the securities house laws, the investment fund, the asset management, where there is a lot of safe harbors for small businesses, for different type of clients who do not need protection. So can we, and we send an extensive letter to FINMA indicating, but can we basically create certain categories of clients who do not need protection in Switzerland from you? Because you don't necessarily want to actually supervise things where there's nothing to supervise, or where people are not actually needing your help. And we discussed at length, and FINMA came, and I think rightly, with the conclusion that they cannot do that. They don't have the power to do that, because it's true that in most of the financial laws, in the ordinances, there is always a provision that says FINMA, the Federal Council allows FINMA to issue additional rules and everything. But here in the Financial Supervision Act, there's nothing like that. So FINMA says that I think there's no flexibility for us to create that. So then we said, trying to be creative, we said, well, maybe we can. What if the Swiss resident who wants to have an insurance, a foreign, freedom of will? I want to have that bloody foreign life insurance. I have the right to contract there. So what if he agrees to waive any protection, and he recognizes that it's not supervised by FINMA? Would that be enough? And I think we tried that, but it is true that the regulatory protection is not. There's no freedom of choice. Basically, it's not like a civil right where you can decide or to have it or not to have it. The law is the law, and basically it is what it is. So me as a Swiss resident, if I decide to go with to enter into a life insurance contract with a life insurance company that is not licensed in Switzerland, technically, I'm not entitled to do it, and if I do that, then the life insurance might be actually facing a regulatory breach in Switzerland. So it seems that FINMA has closed the loop. So and FINMA has closed the loophole, because they are, but at the same time they're telling us that they are not willing to supervise things that does not need to be supervised. They don't want to do unnecessary work as well. So I will come to what I believe might be a solution, and where FINMA has already expressed some interest in it. But so what is happening with these old rulings? Because there has been some rulings by the Federal Banking Commission. There has been some initial rulings by FINMA as well. Are those rulings still valid? And I believe that if those rulings are based on the quality of the product, whether it's insurance or not, they are no longer valid, those things. If it is based on the former definition of what was an insurance wrapper, with the biometrical risk, they should no longer also be valid, because now there is a new circular in place indicating what is the new standard. So that has stopped at that moment where it was valid. And that means that means, unfortunately, at this stage, there has been, because it was a gray area, and everybody was playing a little bit with it, there has been a number of players who actually sold insurance product to, and that's going to be, I think, the next slide, to Swiss residents, mainly the hyper high net worth on a tax forfeit basis, which is people really need those products, by the way. And what happened is like, will you be in a regulatory breach? And the reality is that possibly, yes, it's a regulatory breach, and you have to be a bit careful and treat it, because the fines are very heavy. And not only that, it could be jail sentence, even though there has never been a jail sentence by FINMA, but it's in the law. And worse than that, it's that actually then you're no longer fit and proper to do your business, because you've been fined, and that is something that you need to address. So the resident under Swiss tax lump sum regime, and there has been a urban legend amongst all the players that those can be targeted. And I have been an insurance regulatory lawyer for all my life. I started when I was a junior. At that time, I was working in Zurich, and that's where the 2004 law came into force, actually in 2006. And I started working on that a lot. So I've seen the whole evolution. And then I had clients coming and say, but I know my competitors, they're coming and they have legal opinion. I said, well, there are people smarter than me. I don't know where they're coming from. So we actually had a chance to actually question FINMA on that at some point, and on a specific case. And then I've tried all of it, all what I said, the quality, the need of protection, it's not an insurance product. And I even said there, look, FINMA, there has been even tax decision in certain countries where they do not recognize people under the Swiss tax sum regime as being Swiss tax residents. So maybe it's an in-between thing which you could give a bit more flexibility. I was trying to actually help FINMA to come with a decision, and FINMA answered that last argument and said, guys, the tax definition of residency is not applicable here. It's the civil definition, and the civil definition is basically where is it's of course your registration. That's one sign, but it's not enough. It's where is your center of life. So are you spending enough time in Switzerland? Kids are coming here. Are you actually you have a community? Are you part of a community? Do you have a home here? Do you have your family is here? Your friends are here and everything. And of course, we could have played with it, saying, oh, in a formulary, are you really a Swiss tax resident before selling those foreign life policies? The reality is that if you do that, then you put your client at risk, because of course they have, for the home countries where that policy might be useful for, they have to actually indicate that they are really a Swiss resident. So the thing is also then we question FINMA, because it's imagine FINMA that the person is coming in Switzerland is a Swiss tax resident, but he has expressed his willingness to actually not stay for so long in Switzerland. So that means the majority of the life of the policy will not be in Switzerland, will be abroad. So in reality, imagine it's a 20 years policy, but he says only 5 years here and 15 years in Spain, it needs more a Spanish protection than a Swiss protection. But even there, actually, that for FINMA, it was a bit too complex, I suspect, at that time. And then they said, no, it's when the policy is signed. Because vice versa, it's the same thing. You have a foreigner that signed a life insurance policy abroad and takes residency in Switzerland. FINMA will not be the competent authority, right? So, but even there, it's not that FINMA was not willing; it's that actually they're limited by the law, right? So what happened if some of those contracts have been signed? Basically, the contract is not void. Actually, it's not because you're in a regulatory breach that your contract is a breach that your contract is actually void. Your contract remains, but basically, there is maybe a need to actually find a kind of a regulatory approach with FINMA to actually discuss with them what can be done, basically, with those contracts, and what can be done for the futures if that business is of interest, right? So what can be done in Switzerland technically? There was a bit of an urgent level that whenever everybody's abroad, but the life insurance is in Switzerland, then that is a life insurance business in Switzerland, and that is not the case. So you could technically have your policyholder abroad, maybe the beneficiary abroad, but the life insured is domiciled in Switzerland, and that will not make you fall on the definition of insurance business in Switzerland. So imagine that you have the asset deposited with a bank in Switzerland, the life insured in Switzerland, but the policyholder abroad and the beneficiary abroad, you're good to go. And you're good to go even if the person signing the policy is a Swiss resident, but act on a nominee basis for someone else. So you can have a fiduciary activity, for instance, where someone comes and sign, but actually the consequence of the life policy will actually lie on the shoulder of someone abroad if there is a default by the life insurance. That would work as well. You can come and sign a contract in Switzerland. That's not a problem. You know, to the extent that it is with a foreign policy holder and beneficiary, and you can use Swiss banks. So what to do with the Swiss resident that are of interest with you, and there's a number of reasons why actually they could be of interest for you. First, because of course they're willing, their kids are abroad, and it's a tax succession planning, and it's a requirement for them to have that. Maybe because they intend to leave Switzerland and they want to actually ensure that that from a tax perspective, the capital gain will remain at a neutral position, at least during the lifetime of the policy. Or maybe just because those wrappers have evolved over time and have great performances and great asset manager underneath, and that's where Lucile is going to speak, you know, the financial product, because that's something. And then here maybe a Swiss resident might be interested because you offer a nice performance, and that's something. So here, actually, FINMA does not want to supervise something that is unnecessary, but they also recognize that the law requires them to actually supervise certain things. So going back to FINMA and registering a small branch with one person, whereby you will tell FINMA, here you can supervise us, we're going to target Swiss resident, but obviously no risk will be in Switzerland. So basically we have no tied assets, we have all of this, the product have no biometrical risk, we don't need actuary, we don't need all of this, and then allow them to actually put a footprint on your branch, but then negotiating with FINMA that it should be your home regulator that does that FINMA delegates it to the home regulator. Mm-hmm. And that has been done in the past, and it was, but I think this is probably a way of going forward. Even with the change of law, I think that would be something which might be required. Mm-hmm. So I will, you know, and that is according to the current law on the insurance supervision business. And of course, but in the meantime, and Lucile will start digging into it, you had actually now the Financial Service Act that came into force, which imposes additional duties for the marketing of financial products. So that act says that insurance products should not be part of it. But of course, if you come and you say that you are not selling insurance, but it's something else, then of course that something else should be a financial instrument. And if you're a bank and as part of your asset management, you also propose one of the insurance, you may want to actually look into it.
Yes. Yes, thank you. So what are the regulatory specificities of the life insurance product versus the financial instrument? If we go back in the 90s, there was a trend for the bank assurance products. And since the 2000s, there is a trend for the assure bank kind of product. So as Dominique mentioned, there is a big overlap of the insurance products and the financial instrument, especially for life insurance products that have investment components such as the cat bonds and the wrappers that we discussed just before. So as mentioned, at the time, there was the possibility to play in the loopholes. However, since the entry into force of FinSA on 1st January 2020, if an insurance is subject to the Insurance Supervision Act, it doesn't fall under the Financial Services Act. Of course, there is also, so it depends on the insurer, but also on the type of product. And we just discussed that sometimes it's very difficult to determine whether a product is a life insurance product or if it's a financial instrument.
You know, funny enough, I mean, there are banks issuing now product which offer certain guarantees, which if it would be issued by insurance would be an insurance product, right? So there's certain guarantees with it. So there's an overlap.
Yeah.
And I think FINMA recognized it and they said, well, okay, to the extent it's issued by an insurance, then insurance law should apply. To the extent it's issued by a bank or a securities house, those type of laws should apply. But then the code of conduct is still not aligned. And
yes. And it leads to a situation where, for instance, an AMC that is considered to be a financial instrument will be fully subject to the code of conduct as per FinSA. But a cat bond that has the same feeder will not be subject to the same code of conduct. So something that we would suggest is that a financial service provider that offers a life insurance product to its clients should be and should respect the code of conduct as per FinSA, also for life insurance products. So this leads to the draft of the revised supervision, thank you. To the draft of the revised insurance supervision law, the purpose of which is to align the insurance business and the financial services to create a level playing field. We'll see that, of course, the alignment is not perfect and that there still has obligations that are not still not aligned in the project.
Actually, it's perfect for the direct insurance, but it's not perfect for the life insurance, exactly. which is a business of people, of natural person, and not of companies. Basically.
Yes, exactly. When insurance will offer and propose what will be defined as a qualified life insurance, meaning when the policyholder bears a risk of loss as well as for the specific capitalization product, they will have to provide a key information document. They will have to disclose any advertising as such, and which is something very interesting, is that when they will make a recommendation, so when they will advise their client for specific products, they will have to proceed to an appropriateness test. So they will need to check whether the specific product is or not appropriate in respect of the knowledge and the experience of the policyholder, which is something very new and that exists under FinSA, but which is something very new for the insurance-specific business. One other important change is that there will be exemption of certain obligations, such as tied assets, for instance, or registration to the insurance ombudsman, when the products will be offered to professional policyholder. And what will be defined as professional policyholder are the banks, the collective investment schemes, as well as the company that manage their risk professionally. So it comes to what you said before, is that it's not intended for the life insurance business, because there is no possibility for high net worth individual, for instance, to be considered as professional policyholder. And this is one of the main difference with the actual FinSA.
So the draft ordinance is still not out. And maybe in the draft ordinance, we hope that there will be a system of opting in and opting out for high net worth individual, because it might be, from the text here of the draft insurance revised, it doesn't seem that it will be the case, but there might be that maybe in the ordinance, or maybe in the comments, because it's still subject to comments of the chambers. They will add high net worth individuals who opted out from the retail regime to become a preferred client. And that will actually solve a lot of problems.
Yes, there is one or two other new exemption which are for the insurance intermediary, who offer insurance of a minor importance, as well as exemption for small size insurance companies. That will be mostly in terms of insurance volume, number of clients. But once again, the ordinance that will be drafted by the Federal Council has not been drafted yet, because we're still in the process of the consultation between the two chambers. However, the second chamber, so the Council of State, should analyze the drafts before the end of December. So we will have some news soon, but I think we will not. I think the entry into force could be at the earliest 2023 and not before.
So it's an improvement, but it's not yet perfect, and maybe we hope it will become a bit more perfect with the ordinance coming and the comments that will come to amend the text. Now, but what is important here is that there's an alignment in terms of the marketing, because until the federal act on the Financial Service Act came into force, there was no real requirement into appropriateness test and client categorization for the insurance product, and then it's clearly indicated that insurance are not. But then when you take the message of the Federal Council, it says like, hey guys, it's not, but be careful. We believe that, and that's applying to the Federal Act on Financial Services, that insurance wrappers, which are really much a financial product, you should still do that. So before the entry into force of that Revised Insurance Act, which will actually impose similar standards, whether or not you have to actually treat those products as a financial product and do your appropriateness test, if there's any advice in your marketing activity, is something a bit of a gray area. But I would really, if it's part of your asset management strategy, I would still advise you to actually follow the same rules, including for wrappers. So I think we just reached the 45 minutes, and I think we went through all the questions, so and all the topics, and there is two questions that came in. If you have any additional questions, time for to actually put them. But so there's a question that says, what is about what if a client bringing his existing life insurance taking out prior to immigration to Switzerland? So I think here it's an easy question. If a client actually has entered into a life insurance before coming to Switzerland, becoming a Swiss resident, that's fine. It's not a really Swiss question. It's shocking somehow, because it's true that if someone enters 2 months before coming to Switzerland with the intention to come to Switzerland, the reality, he will spend most of his lifetime in Switzerland and will probably need more a Swiss regulator than anything else. But it will be fine. There will be no regulatory breach. So what if about a Swiss trustee holding foreign policies, issuing insured lives residing outside Switzerland? So so the Swiss trustee actually, if to the extent that I suspect that the beneficiary of the life policy will be the trust, and it's a foreign trust, and the beneficiary of the trust are not Swiss resident, that is fine. It's a Swiss representative of a foreign actually, it's acting like as if you were acting on a nominee basis, and that will be actually fine. But make sure that none of the beneficiaries are domiciled in Switzerland, and not at the settler of the trust should also not be domiciled in Switzerland. But if the Swiss trust is signed on behalf of the foreign trust, then you'd be good to go. I think if there is any other question to come, I don't see any other. You have our contact detail and in the last page. Just feel free to send us a question per email if you have so, and we'll be happy to answer. Thank you very much.
Thank you, everyone.